I know you wanted to talk a lot about the economy.
Right. So I've been looking at the data. Well, we've talked about it in previous weeks, and looking at the BEA, the Bureau of Economic Analysis website over the past couple of days, I saw that savings are way up. Now, back in March, savings were 8.2%. Now that's pretty good. That means they recommend, I think, 10% of your income at least should go into savings every month. In April, they're up to 12%. Okay, even better. That's up 65%, about no, about 50%. So okay, so doing good. We're saving more money. People are starting to get a little worried that we're going to hit some turbulence here economically. So they're putting some money away to be ready for if I lose my job, if I'm having trouble making my car payment or my house payment. In May, or excuse me, in April, I'm sorry. The, so that was February and March. Then the reports were issued in March and April. But the report for May, which is about the report in May, which is about the month of April, 33% people are saving 33% of their income in the month of April. And that's the latest. That's from May 29th when that was released. So that's huge. Now that money isn't just staying under people's mattresses. We call it savings, but what's actually happening, of course, is people are putting it into their bank accounts. They're putting it into investments. We've seen a big stock market rally this month, and I think a big reason for that is because people are putting that money away, and so it's shored up the stock market. We've seen the Dow Jones has recovered from its lows. It's up 50% since it's low after the latest crash here. The Nasdaq and S&P are up 45%, and so all the major indexes are back to where they were before the crash.
And
And
isn't that amazing, Pete? I mean, I think that's amazing. When I look at my own portfolio, I have a 457. I also dabble on E-Trader a little bit, and it's funny to look at those numbers because I took a severe hit when the pandemic started. I lost a lot of money. I haven't gained it back, but the my personal portfolio has gone up quite a bit from its low. And
okay,
it really, to me, in some ways, it's absolutely shocking to me because, here I am sitting here like, gosh, my neighborhood is literally burning down. We had riots in my neighborhood, and the stock market is going up. And it's interesting because you talk about people are saving more, and that's a pretty interesting, that I find that fascinating because that does explain to me a lot of why the market is able to rebound the way it is because people are simply putting more money into it.
right. Yeah, and personal income is up 10%. So if you look at the amount of personal income and you look at the the um the drop in consumer spending, because there was a big drop in consumer spending. I don't think I have the number in front of me, but it was about 12%. And then you look at the difference between savings in April and savings in May. Well, there it goes. They spent less, they earned more, and they saved way more as a result. So, it checks out. The numbers are adding up there. We've seen, in the latest jobs report, 2.5 million jobs created. 2.5 million jobs created. If
That
this
was
were,
completely shocking to me. I think even on the show we
yeah,
talked about this last week that I thought I was hoping and praying that the unemployment rate wouldn't go up,
right.
but it actually went down. I was amazed by that.
Yeah, a lot of people were, yeah, exactly. People were saying, has it bottomed out yet? How bad is this going to be? And then it turned out to be positive. In normal times, a gain of, say, 200, 300,000 jobs is a pretty big month. It's a good month for the economy. So 2.5 million is simply unprecedented. Unemployment went down from 14.6 to 13.1%. There was some talk about, well, is that really right? Because you still have people who are staying at home. But the fact is, we haven't counted those people who are staying at home in previous months as being unemployed. And so if we're going to be consistent, if these people who are temporarily furloughed who are coming back to work in theory. We hope they're coming back to work, but they're staying at home because of the coronavirus. If they were not counted as unemployed before, they shouldn't be counted as unemployed now. That would be a mistake. But if you did count those people, then unemployment would be 16%. But that would mean that the drop in unemployment would be twice as large because you had a lot of, well, just like I said, jobs in general have been created. People are coming back to work, and new jobs are being created. So people are finding new jobs. Finally, it seems like we have hit the bottom, at least for now. Um, Oil went crazy before all of this. If you remember, there was a time when oil was negative. You had oil tankers that they didn't know where to go because there was nobody to sell it to because nobody wanted it. People weren't driving. There was nobody. There was just no money in refining it. Uh, so a lot
Oh,
of
well, I can attest because I do a commute at least once, well, twice a week, at least twice a week. I go from the East Valley of the Phoenix metro area to the West Valley, and yeah, the traffic is back. There's no relief in the rush hour traffic as there once was just a few weeks ago. There's a lot of cars on the road.
Well, it's not true everywhere. A lot of states are still shut down. But yeah, Arizona seems to have opened back up. A lot of states have opened back up, especially states with smaller populations, medium to low population states. But here's what Reuters said as of about a week ago. Shale oil fed a global glut. OPEC and allied producers supported prices by cutting output. If you remember, there was that whole fight between Russia and Saudi Arabia. But this year, Saudi Arabia and Russia briefly pumped more, and that was part of what precipitated the panic. Then fuel demand collapsed during the COVID-19 pandemic. Oil prices are about half of January's level, and many shale producers have shut down their wells. So we're seeing that supply is going down. We're seeing that demand is going back up. So we should see a rise in oil prices. Some of these businesses are going to go out of business, these oil companies, which means that you're going to see some people laid out of work. It's look, lower oil prices are good for the economy. This isn't the whole economy. This isn't the whole story. But this is just one sector of the economy.